Here are some easy mistakes that homeowners make on their taxes. So I'm going to share with you so that way you don't rush the IRS or pay more taxes than necessary. Know what to avoid, guys. So one of the biggest mistakes is deducting the wrong year of property taxes. So here where we are, the property tax is on a fiscal year, meaning that it starts on July 1st and it's on June 30th. The IRS does not care about that. What they care is what did you actually pay in the year. So let's say you filed for the previous year, how much did you pay? So there, if you pay $5,000, that's all you can deduct, $5,000. They don't care if your whole fiscal year was $6,000 or $7,000. So you gotta look at the check you make or the payment you make in the year that you filing your taxes. Number 2 is confusing escrow amount for actual taxes paid. So the escrow statement can be pretty confusing, and sometimes, if you put your property tax into escrow fund, and every month you are paying your mortgage plus your property tax and insurance, so the amount you pay on the monthly basis is not what your actual taxes pay for the year. But when you receive your mortgage statement at the beginning of the year for you to file for your previous year, they will always tell you on your mortgage statement how much property taxes they pay, and you use that to file your taxes. And number 3 is deducting point pay on refinance. In many cases, you can deduct point when you pay a lender when you buying your home for the first time. So number 3 is deducting the point pay on refinance. So in many cases, when you buying point when you purchase your home, you can deduct that in general. However, if you are refinancing, you cannot do that. And a lot of time, if you are buying for rental purposes, you actually have to amortize the point you pay over the life of the loan. And if you don't know what I'm talking about, definitely reach out to your CPA or your tax preparer. And the next one is failing to pay your true up property tax. And even though this is not related to IRS, I think that you should know, because when you get your property tax bill when you purchase the home, it's actually based on the seller or the previous owner tax value, and it's not yours. So you only paying that the lower amount. So when the purchase go through, and then the county is going to do a reassessment and they'll look at what is the current value that you purchased it at, and then they will give you an additional bill to pay for the difference. So definitely keep that in mind. So when you see that bill, you have got to pay that. Otherwise, you'll be delinquent, and they can actually, and if you don't pay it in long enough time, they can actually auction your home off to pay for the property tax, and don't let that happen to you. So those are my tips on how to avoid making mistake on your tax return. I hope that has been helpful. Please click like and subscribe if you have found this to be helpful, and see you in the next one.